Welcome to the High Value Sales Show of Eversprint.com. I'm Malcolm Louie, the managing member of Eversprint, and today we're speaking with Tim Bratz, the CEO and founder of CLE Turnkey Real Estate, a real estate investment company that acquires and transforms distressed apartment buildings into high-yield assets for their own portfolio. Welcome to the call, Tim.
Malcolm, I'm excited to be here. Thanks for having me, buddy.
Tim, you grew your company's gross rental revenue from $1.5 million in 2016 to $3.5 million in 2017, a 133% increase, and in 2018, you hit $15 million. Before we talk about how you grew your company so fast, can you briefly share what your company does beyond my quick intro and how your company differs from the competition?
Sure. So I own a real estate investment company. I buy apartment buildings all over the Midwest, Southeast, South, and started out doing all sorts of different sorts of real estate though. I was a licensed real estate agent out in New York City for a couple of years. And I remember brokering just a retail lease and saw the landlord, and it was about 400 square feet. And we signed a lease for $10,000 a month for 400 square feet in New York City with a 12-year lease term and 4% annual escalations every year during that lease term. And so I did the math on it. I saw the landlord was making about almost $2 million for doing something at one point in time. So I decided I wanted to become a real estate agent. So I've done everything from brokering real estate to wholesaling real estate to fix and flips type stuff that you see on HGTV. A lot of turnkey residential real estate, buying a single family house, fixing it up, packaging it with a tenant and management, and then selling it to, just more of a passive investor. And about almost 2 years ago, I looked at my net worth and where I was spending my time and where I was spending my efforts, and realized that I was just kind of doing a lot of transactional real estate, getting paid one time, then having to go do it again in order to get paid again on it. And realized the reason I got into real estate was for the passive income, that residual income. And, 90% of my wealth at that time came from my apartment buildings, and it was only 10% of my time. And they were easier to manage and bigger projects, easier to get financing on. And so over the past couple of years, I've been focusing just on apartment buildings. And, by making a declaration to the universe of saying, I'm burning the ships on all other pieces and parts of real estate investing and only focusing on buying apartment buildings, you see what happened to my numbers. So it's been kind of a whirlwind the past couple of years, and it's been awesome. And we're excited about, our future as well.
So it sounds to me the biggest driver of your growth from 1.5 million in 2016 to 15 million in 2018 was primarily a focus on buying apartment buildings and holding onto them for the passive nature of their revenue and income. Is that right?
Yep, exactly. And it's that focus, as you had mentioned, is absolutely critical. I see a lot of entrepreneurs who get involved in the business and they call themselves serial entrepreneurs, and because they get their hands in many different things. And a serial entrepreneur, when somebody self-describes himself like that to me, I actually get a little bit leery of it, because I realize that they're not focused, because I used to be one of those serial entrepreneurs, self-proclaimed, right? And had my hands in all sorts of different things, but because I wasn't focused on any one thing, I was just spread real thin instead of diving deep into any one business. And what I realized, it's kind of like the medical field. You take a look at like a general practitioner, physician, and they can make good money, six figures, $100,000, $150,000, $200,000 a year. But then you take a look at the people who are specialized in the medical field, the heart surgeons and the neurosurgeons and all those specialists, and they're making multiple hundreds of thousands of dollars, if not seven figures a year, because they're the best at what they do. And I realized over the past 24 months that by focusing just deeply laser focus on one thing that you could be the best in the world at, it's amazing how many people want to be involved with experts in their field. So it's been easier to find more opportunities to invest in. It's been easier to raise private capital and equity investors to partner with on my different projects. And just by that intense focus, it's really grown my business pretty significantly.
So you said before briefly that that you're focusing on one thing that you do extremely well, what would you describe as that one thing?
Probably my unique ability is really connecting people and understanding, A to Z of all of real estate investment. Because I've done everything in real estate investing, I know the acquisition side, I know the financing side, I know the private money side, I understand the project management, the renovations, and the property management piece, and the refinance, and all those, from A to Z of real estate investing, I understand. So I can, speak knowledgeably to sellers and buyers and private investors to talk with them and overcome a lot of objections. But that's from getting kicked in the teeth from a long time of being in the business. But my unique ability is really just connecting with people and educating people on the process. I think true sales is just an educational process, and I'm pretty good at, I guess, conveying my message and taking complicated things and making them very simple, like a third grade level. I think true genius is not in how complicated and complex something is, but how simple you can make a complicated subject. And not that real estate investing is that complicated, but it can be kind of overwhelming to somebody who's not in the field on a normal basis. And so I'm able to take some of the complex pieces of real estate, simplify it, and boil it down to more of a third grade level, because then I can then understand it. If it's above that, it's above my pay grade. And and then I'm able to convey that information to others. And so it makes it very simple and easy for people to want to invest in our projects. It makes it very simple for our team to understand what the next step is, our standard operating procedures, everything that we do. And it's communication and also simplifying and just doing things super, super easy for everybody to understand.
Okay, got it. For the second driver of your growth, Tim, when you grew your business from 1.5 million in 2016 to $15 million in 2018, how much of that was from acquiring new properties? I imagine most of it was. And how much of it might have been from increasing your rental rates?
Yeah, I mean, majority of it's from acquiring more properties, right? In real estate, I have a fixed business, meaning if I go buy a 50-unit apartment building and I can rent out each unit for $700 a month, that gives me $35,000 a month in revenue, or $420,000 a year in gross rev, right? The issue with that is there's only 50 units. And if there's only 50 units, I can't increase the revenue of that building. Now, nominally I could, can you bump up rents a little bit every year, 2, 3, 4%? Yes, you could do that. Could you add laundry services and that way increase some revenue there? Yes, you could. Is there signage that you could put on the side of the building, or parking spaces you can rent out, or storage spaces you can rent out, or additional amenities that you can include and then charge for, or even cell phone towers on top? There's a lot of the little things that you can do, but it's not a massive impact to the building. The best way and that I've found to increase my revenue is just by acquiring more buildings. And with the lending environment the way that it is, and a lot of people a little bit hesitant on the stock market and how volatile that's been, they're trying to put some money into fixed assets. And so we have a pretty significant amount of people who want to take some money out of the market and invest it in real estate with us. We're phenomenal operators, and we're able to deploy that money into great deals, great projects. I do a little bit of the education. I'm kind of bigger than a lot of the traditional investors in real estate, but I'm not quite like a hedge fund or a real estate trust. So because I'm in the middle, I do some coaching and educate other residential investors, house flippers, and people in the turnkey game and all those kinds of things on how to get out of that transactional phase and leverage up into apartment buildings. And by putting on educational seminars on a quarterly basis, I'm able to develop relationships with people who can either go out and find deals for us or who want to invest passively with us. And so I have some pretty significant deal flow, new opportunities coming across our desk on a daily basis. We're able to cherry pick the best ones, the best of the best, out of hundreds of deals that we look at on a monthly basis. We can pick up 2, 3, 4 the best ones at the lowest cost basis, and creates a good return for us. So we're buying at kind of a wholesale price versus more of a retail price. And we're able to come in. We understand operations really well. So we're able to, force some appreciation there by putting in some sweat equity in these deals. So we're able to increase the income, decrease the expenses, do all those kinds of things, which then increases the net income, which increases the value of the building that you can then either sell it for or refinance it for. And so that's my business model is I buy distressed apartment buildings, I fix them all up, and then we refinance them, cash out our investors, and then we let it cash flow, the property cash flow for the next 10, 12, 15 years. And we'll let future Tim deal with what we do with the building 10 years from now based on what the economy's like and the market and the and real estate in the different towns that we own.
So to acquire new units now, key is finding the right properties to buy that meet your criteria, being distressed, something that you can clean up and raise the value and raise the rent subsequently. Now, is getting the leads from your educational programs that you do the primary source of finding deals, or do you have another source as well?
Yeah, we do a lot of marketing on our own. We've kind of built a reputation, as I said, to be the apartment buyer in town. I'm not the biggest, even in Cleveland. There's several people, probably, I don't know, half a dozen to a dozen people who have more units than I do, and have been doing this longer. But because I have such a heavy social media presence and I network a lot and I educate a lot, I'm probably known as the biggest apartment buyer. Like I'm the best known apartment investor in Cleveland and really in many markets across the country, just because I'm pretty active on social media, which spans, across the United States. But yeah, I would say it's probably about, I've only launched my education business about 6 months ago. And so we're getting a lot of leads and educating people on how to search for good deals. And we have a couple really, really good projects in the works right now. Majority of my opportunities and deal flow comes from my team, my marketing, referrals that we already had, network that we already had. And it's increasing though from my education business where we have this, this increasing flow of opportunities there though too. So I expect it, especially in the next 6 months, to be majority of it from my education students.
Okay. Now, so number one driver is your focus on buying apartments for passive income. Second one was acquiring more units. Is there a third driver of your growth in gross rental revenues?
No, we don't try to spread ourselves across too many things. We just focus on buying more apartment buildings. Mm-hmm. We buy them at a wholesale price and we're able to increase the values pretty significantly. We refinance them and then we can sit on them and hold on. And then our investors get paid back. So now we have more money to deploy into more properties. And we just keep on doing it that way, and that's the primary driver for us in how we do deals.
Right. Now, when you say you refinance the properties and you cash out your investors are essentially just lending you money to finance the property. They don't have an equity stake in it.
We do a little bit of a hybrid. So I'll give you an example. Let's say here's a deal that I just did. I had 48 units in Cleveland, Ohio. Actually, it was in like a suburb of Cleveland up near the lake, solid B class kind of an area. And we bought, for sake of using round numbers, we bought and renovated the building for $2 million. That was our all-in cost, $2 million. The bank gave us a loan for $1.5 million, and then we raised $500,000 from a private investor. That happened to come from one individual. More often than not, we usually have, 5 investors at $100,000 a piece who then would invest. But, for ease and sake of explanation here, it was one investor who invested $500,000. It took us about 12 months to buy, renovate, re-rent, put better management in place, stabilize the property. And over the course of that 12 months, we paid our investors a debt piece of 10%, regardless of the property's performance. So on $500,000, we paid them $50,000 in interest payments over that 12-month period. And then the property appraised for $3.5 million 12 months later. So we're all in for $2 million. The property appraises for $3.5 million, and we're able to get a 70% loan on that property. So, hang on a second, 30 times 0.7. So we get a loan for just shy of $2.5 million on the property. When the new lender gives us a loan for $2.5 million, we take $2 million of it, and that goes to the bank that gave us the construction loan of $1.5 million, and it pays back our investors on their $500,000. Then there's another $500,000 spread there. Are you following me so far, Malcolm?
Yep, got it.
Okay. And on the $500,000, at that time, we actually give our investors another 10% equity in the deal in perpetuity. So it's just kind of a cherry on top, a little bit of icing on the cake as a thank you for being involved. And so on those $500,000 of refinance proceeds, 10% of that, another $50,000 would go to our investors. So our investors in that deal made more than 20% return on their investment in 12 months. And then they make 10% of all the cash flow. It's about $7,000 a month in cash flow. So their portion is 10% of that. So it's about $700 a month. And when I say cash flow means, there's the gross income minus all the operating expenses minus the debt service, and that's whatever's left over is the cash flow. So they get $700 a month in cash flow for as long as we own this building. And again, they don't have any money involved in it anymore. So it's pure, gravy. And it's essentially an infinite return.
Yeah, pretty good.
And then they have, that they're entitled to 10% of the equity in the property too. So on that, if it's worth $3.5 million and our loan's only $2.5 million, their equity in the project, or the total equity in the project, is $1 million. Their equity, 10% of that, is $100,000, which they're able to, put on their balance sheet and increases their net worth by that amount of money. So it's a good deal for the investors. It's a good deal for me because, as you can imagine, as soon as I repay somebody that $500,000, what's the first question that they ask me? Where's the next one, right? Yeah. So they're asking me, and then I'm building a long-term relationship with someone. We're able to turn that money over maybe 6 or 7 different times over the course of 10 years, and then they can have a little bit of equity in all these different projects with passive income hitting them from 6 or 7 different deals, and having these big pops of refinance proceeds and sales proceeds whenever those events occur. So right. It's a good opportunity for them. It's a good opportunity for me because I don't have to go out and re-raise money every single deal that I do, because a lot of these people like and trust me, and they understand our business model, and it makes sense for everybody. And I think, a rising tide floats all boats, so it makes a lot of sense.
Yeah, definitely. Now, when you say they own 10% of the equity, is that real equity, their names on the title and everything, or is it more of a phantom equity type?
Yeah, so it's real equity. We create a new LLC for every apartment building, and so let's say it's 123 Main Street is the property that we're buying. We'll create an LLC that's 123 Main Street LLC. And of 123 Main Street LLC, my entity and any joint venture partners we have would own, X percentage of it. And then the investors, however much they invest and however we break that down, would own another 10% of the project. And so they're actually on the operating agreement for that LLC, and then that LLC owns the property itself.
All right, very cool. Now, for your cash flow definition, you didn't mention anything about setting aside some money for capital expenditures. Is that something that your original investors don't need to worry about? Not something that you will take care of going forward?
Yeah, so that's actually kind of in the expenses of the property. So when we have, taxes, insurance, and maintenance, and utilities, and property management, and all those different things, there's also a maintenance reserve in there as well that is usually a couple of percent per month that we take off the top and just leave it in a reserve account. And then, that way it doesn't mess up the monthly cash flow too much if a big expense pops up. But we do some pretty heavy improvements on these properties on the front end. So we try to, normalize and have very predictable expenses on an ongoing basis as we manage this thing for the next 10, 15 years. We're doing plumbing and electric and the roof and new windows and new flooring, paint, fixtures, all those kinds of things, new mechanicals on the front end. So we don't have these surprises, I guess we'll call them, when they do occur in real estate.
Right. And if something unusual does happen that you weren't planning, that consumes all of your capital expenditure reserve fund, then what happens?
Then either I would contribute to the project and then pull my money back off the table from the cash flow. We would just figure it out that way. Most of my investors, we have a really good working relationship, and they're very reasonable people. So if I said, hey, I had to put in another $30,000 because the boiler busted, and we only had $20,000 in the reserve account, and it was a $50,000 boiler. If there's no way to finance it or put it on a card or something along those lines, I have good enough cash reserves. I have plenty of cash reserves where I can then contribute the $30,000, and then that $7,000 a month would go back to my company until we're made whole in that thing, and then we start distributing cash flow again.
Right. Okay, that makes sense. So for 2019, what are your plans? So we're ambitious. We're excited, and things are going really, really well with the education piece, and our operations really dialed in, and we're excited about what we have going on. And so we have another. I'm just over 2,000 units as we speak today. Rental units in my portfolio. And some of those I own 100% of, some of them I own 25% of. So it just kind of ranges on how much my ownership is. But I have significant amount of equity in over 2,000 units in Ohio, South Carolina, Georgia, Florida, Texas, Oklahoma. And we're looking to expand that. We're gonna and actually a little over 400, almost 500 of those units were just picked up in 2019 so far. So when I gave you my numbers, it was around 1,600 units in 2018, and so we're already at 2,000 or 2,100 about, and we expect to hit around 3,000 units this year. And once all that stuff stabilized and cash flowing, that'll kick off north of $30 million a year in gross rents. So that's not net revenue, but that's majority of our money. It's not like a typical business that has like sales revenue. Our sales revenue is our rental revenue. And so we'll have about $30 million of gross rents. On average, about 50%, 40 to 50% of that goes to expenses. And so we have about a 60% is the net income that's left over, 50 to 60%, depending on the market and the area where we are. And then we have debt service after that. So our cash flow is typically around 20 to 25% of the gross revenue, and that's just pure cash flow that we're able to put in our pocket at the end of the day. So after all expenses and operating capital and all those things, all debt service and all that. So it's we're pretty excited about it. We should be north of 30 million by the end of 2019, and we'll see where it goes from there. We have a portfolio value by the end of this year. We're expected to be around 300, maybe a little bit north of $300 million in assets that we own and manage. That we own. We don't manage anything for anybody else, but we manage our own stuff. And our goal is to hit $1 billion in the next 36 months. So I know that we can do it, and it actually was 48 months, and I scaled it back to 36 months. So I'm confident in our team. I'm confident in our ability to raise the capital and find awesome deals and find awesome projects. And we do a little bit of ground up construction as well. It's actually a little bit more predictable in the cost of the total project, and it kicks off a little bit more cash flow and a little bit less maintenance on an ongoing basis because everything's brand new. But you have a little bit more downside on the front end anyways, because you don't have as much cash flow coming in as we do on some of the other projects that are already partially occupied. And so it's just more of a cash flow management piece than anything else. But we're excited. We're building quite a bit down southeast area, Georgia, South Carolina, and buying a lot and renovating a lot in
like the Midwest and Texas, Oklahoma kind of areas. And we're open to buying in other locations too. We just haven't partnered up with anybody in any of those areas yet.
So how are you finding these deals in other states? Do you have people on the ground in Georgia, South Carolina, Texas?
Yeah, they're students that come out to my events, or people that I know just from, general network of real estate entrepreneurs. I'm part of a couple different mastermind groups that meet on a quarterly basis every year. And so I know some of the best operators across the country in residential real estate, and all of them got into real estate because they want that mailbox money, right? The residual income, the passive income. And so they know how to work with contractors. They know how to find good deals. They can be boots on the ground at whatever market that we're investing in. And my team has, I have the balance sheet to go and acquire any size loan for apartment buildings. I have the liquidity also to do that and the experience to do that. So I can get the financing. A lot of times I can raise the capital, and my team handles the property management from right here in Cleveland, Ohio, because a lot of that stuff can be done digitally nowadays. Utilities can be set up over the phone, and maintenance work orders can be done online or over the phone, and tenant rental applications and leases can be signed all through, DocuSign or anything like that. So we can market leases on units online. All we need is a boots on the ground partner to help with open houses and move-ins and move-outs and a lot of that stuff. And usually our properties are on average around 100, a little over 100 units a piece. So then it makes sense to have an on-site property manager as well. And then they all just dial into our management software, and we're able to manage the property, look at real-time reporting anytime we want, and it's all dialed in. It's been a lot of struggles and trying to figure it out. I've been in real estate for 10 years now, and I've only been good at it really the past 3. So it's been a lot of getting kicked in the teeth and struggling and failing forward and just sticking with it, and learning curve after learning curve after learning curve. And now it looks like we're an overnight success, right? So there was a lot of sweat and tears and work that went into the getting the basis of knowledge and understanding of how we do what we do, and just dialing in those systems and refining everything over the past decade has put us in a position where we can buy several $100 million worth of property every single year now.
Fantastic. What do you see are your biggest challenges this year?
I'd say the biggest one is, nobody can predict the economy, right? And so one of the biggest scares is what's going to happen with the housing market. Obviously, everything's going great right now, and financing is easy to come by. But as interest rates increase a little bit, as speculation occurs in both the stock market and the housing market, how is that going to affect us in apartments? And so, I was going through school and decided I want to become a real estate investor from 03 to 07, but I never bought anything until 2009. I bought my first duplex in 2009. And this is right after the market shifted last time, right? And so in 2009, I looked at everybody who either made money and were able to ride out the storm or went bankrupt. And what was the difference between those two? The major difference was, excuse me, the major difference was the people who lost everything and went bankrupt or had foreclosures on their record or had short sales on their record, they bought for speculation, meaning they were rolling the dice. They were gambling. It's like, buying at a retail price today, hoping that it's worth more tomorrow. And when it wasn't worth more tomorrow and it actually went down in value, because they bought at the top of the market, they were not able to do anything with that property. And so the people who bought for speculation ended up getting beat up pretty bad. The people who bought for cash flow and could had an asset that somebody else was paying for, i.e. the tenants made payments every single month that covered the operating expenses, that covered the debt service, and that put cash in the investor's pocket. And when I take a look at that, and especially the ones who did really well were more the B class kind of areas. So it's pretty arbitrary, A class, B class, C class, D class, and you can judge it however you want. D class is, the war zones and the hood, the places where are very dangerous, the worst school systems, the highest crime rates. Like those are the D class areas. A class areas are the best school systems, the safest neighborhoods, the places where you would desire to live. And so in between that, what I found is that the people who owned in kind of the B class areas, and that's where I grew up. I grew up in a B class area, a suburb of Cleveland, Ohio. The average home sale price was $100,000. But it was a good school district. I felt safe playing outside, was raised there. In those areas, everybody can afford those areas when the market's good. And then when the market shifts and the economy scales back a little bit or housing prices come down a little bit, all those A-class luxury kind of renters, they move into B-class areas. So regardless of the marketplace, those B-class apartments stayed occupied. And I realized that, and that's why I've developed my company the way that it is to be completely recession-proof. I don't have a high degree of risk tolerance. For me, I never ever want to risk principal. That's why I buy at a wholesale price. I physically force the appreciation by doing the work myself. I never speculate that prices are going to go up or that rents are going to increase. If they do, that's just a cherry on top. I have a very predictable system of buying apartment buildings and refinancing apartment buildings and cashing out my investors because I know what the property's worth, and I project for higher interest rates. I project for a lower loan to value on the renovation than I can get today, and I'm projecting 12 months from now to try to compensate for a lot of those risks and a lot of that uncertainty that could be coming down the pipeline, especially next year. It's an election year, and whenever there's an election year, the stock prices start going crazy and the market starts going crazy, and we're expecting that to occur, and we're buying at even a deeper discount today because we know that when it comes time to refinance in 12 or 18 months from now, then that's the kind of stuff that we're going to be facing. So the fortunate part is we've proven that the concept works. We've proven our model. We've proven that we're bankable and we're financeable. And even in 2009, 2010, when nobody was lending on real estate, there were still people getting loans on real estate. It was just they were the most bankable. They were the ones who had great assets, who had the cash flow, who had the experience, and we are those people. So I'm not too concerned about how lending is going to affect us because we just keep on buying at low prices. We have cash flowing properties. We have a big balance sheet. We have a lot of liquidity.
So Tim, what needs to happen this year? If you had a magic wand that you can wave and make happen, what would it be? Would it be, finding more deals? Would it be finding more investors? What would it be to really make things rock and roll for you this year? Maybe even bump up your targets even further. Maybe instead of going for a billion, you shoot for 2 billion of assets.
I love it. That's a great question. I think as real estate investors, we're always looking for deals and we're always looking for money, right? So we're always looking for an opportunity, for new opportunities to invest in. And at the same time, we're always looking for capital to then deploy in those projects. And very rarely are you deal heavy and money heavy at the same time. So although, sometimes I have access to a lot of capital and I don't have enough deals, sometimes I have access to a lot of deals and not enough capital. And just, weighing the balance or doing the balancing act between those two things is just a constant thing that we're paying attention to. In order to double our goals and aspirations for this year, we would just have to start looking into some bigger stuff. The only hurdle that we face when we get into the bigger stuff is now you're playing with the hedge funds and the real estate trusts, and they have hundreds of millions of dollars that they can deploy, and they can come in and buy it with cash or just investor capital, and it's hard to compete with that because we always balance out with financing. That's why we're able to pay our investors 10% on their money, because that's based on 20 or 25% of the down payment, and the other 75 or 80% of the money comes from the bank at 5% interest rate. So our blended cost of capital is only about 6%. When some of these hedge funds and the REITs, and they pay their investors less. That's just the reality of the situation. And they can go in and they have so much money that they can go and deploy it in cash and buy up properties. And it's hard to compete with them. You see, we're kind of in between. Again, we're bigger than all the residential investors, but we're not quite a hedge fund or a real estate trust. So our ballpark is right in that, 75 to maybe 200 units, right in that ballpark is really our sweet spot. And if we started going above that, then again, we compete with the real estate trust. So it's not really our goal to compete with them unless we had access to hundreds of millions of dollars. At that time, we would probably get into some bigger properties. And just like there's distressed single family houses that people didn't take care of, there's distressed apartment buildings that people didn't take care of, or companies that went out of business and let their office building go. And I'm talking about big office buildings. I know some stuff in Ohio that a couple of the largest or office buildings in Ohio that are only 20% occupied because the fund that owns them just didn't care about it anymore. And so I'd probably dive into some of those and start buying some of those bigger opportunities. They're out there. It's just I would need to have access to tens and hundreds of millions. I have access to 10, 20, $30 million that I could probably deploy if I really got to work on it. But I don't have crazy access to capital in the hundreds of millions and get into that bigger stuff. So we're okay where we are right now. We are launching our own fund. And we're going to see how that goes over the course of the next 6 months here. I think we can raise probably $20 or $30 million in that, based on what we do and how we do it. And in the meantime, we're just doing one-off kind of investment opportunities for our investors. So we'll see how the fund works out. But I have realized that finance is that industry that commands all other industries. So if we can launch our own fund, and especially paired up with my educational events, I can see us getting involved in a lot more transactions, a lot more opportunities, just from the monetary side of helping other people buy apartment buildings, and still, keeping a good grasp on it to make sure it's managed properly and operated properly. And so I think there's definitely opportunity. It's pretty, especially as you gone over my numbers, it's impactful on how much this stuff compounds and how this snowball starts really gaining weight and gaining momentum year over year over year. And so we've been able to pretty much 5 times our income in 2018 than we did in 2017, and we're going to more than double it again in 2019. I can see that potentially tripling or quadrupling again, maybe even this year if the right opportunities come about and the right money comes to the table. So it's definitely possible.
Yeah, especially since you have the educational component, which can appeal to students and investors, both the ones who actually want to be involved with real estate as opposed to just being an investor of real estate.
And that's the crazy part. I had an event back in October, and somebody came up to me and said, "Hey, listen, I know so-and-so," and who we would all know. It's a very famous very famous person who's also a billionaire, made a lot of money in the entertainment realm and music and movies, and then very smart from a business acumen as well, and wants to deploy a bunch of money in real estate. So this person comes up to me, he's like, "Dude, I know so-and-so who's a billionaire, wants to deploy $100 million in real estate this year, but he doesn't have anybody who can, he came to me, I'm just a residential guy, I can deploy 2 million of it, and that's about it. But maybe there's some things that we can do together." So he's getting me on a phone call with a billionaire, and really at that level, it's just really the billionaire's attorneys and CPAs. But you never know who could come into one of these events and who you could connect with. And it's hard to project where we're going to be and what we're going to do. But from a very predictable standpoint, I'm very confident we'll hit 3,000 units this year, and be able to take our revenue to at least $30 million. And I think we'll be able to increase it maybe a little bit more than that. So we're excited.
Yeah, sounds pretty exciting as well. Now, I saw from your LinkedIn profile, you had another website for vacation home rentals with 2 properties in Florida. Now, is this another business you're thinking about ramping up?
Yeah. So that was one of those things when I was not very focused and I was doing a bunch of different types of asset classes. And I bought 2 vacation houses outside of Disney World and thought it would be an awesome investment and realized it just took up way too much time. We make a decent return on it, but the financing's not as easy. The management's much more difficult. It's a new learning curve that we'd have to go through with my team. And so after buying 2 of them, I stopped doing it. They're great little projects. We have them dialed in. They're pretty much on autopilot. I gave them to I actually brought in a business partner and have him and his team running it so it doesn't affect my team. And so it's pretty much passive for us now. But just with where the residential housing market is and all that stuff, we decided to stop buying vacation rentals and just focus on, what we're good at. Our bread and butter is B-class apartment buildings. So we just stick to that.
Now, for the educational side, right? Fantastic way of finding leads for new property, connecting you with investors. How's that coming along in terms of the growth? Do you have growth targets for getting more students enrolled in your program and getting them started?
Social media is a very powerful thing. I have a lot of people who reach out to me. I just try to share information on how to do deals, and a lot of people keep that content and keep their secrets pretty close to their chest and don't want to share that because they think they're going to be creating competitors. For me, I don't see it that way. And what I've actually found is the more information I give away, the more I interest people in becoming partners. And for me, I'd rather have 25% of a watermelon than 100% of a grape. You know what I mean by that? There's a lot more squeeze in 25% of a watermelon. There's a lot more juice in that squeeze than in 100% of a grape. And so for me, it's more of an abundance mentality than anything else of being able to do more deals, being able to do more deals across the country in different markets with more different operators and other people. It's a way that I can grow my business without growing my overhead in-house, right? So I can partner up and joint venture with people who are only compensated based on equity in the deal and the deal performing. And it's a way that they can get involved in apartments. And it's a way that I can grow my portfolio without having to grow my team at the same time and take on all that additional overhead. And so it's a really cool, but at the same time, I'm not getting married to anybody. It's just on a deal by deal basis. And so we're still able to control the money. We can still control the management, and we can see real time whether the property is performing, going in the right direction or not. And we can step in because we have the acumen and know-how of how to do A to Z in real estate. It's a pretty unique position to be in. But to answer your original question on the growth metrics of the education side, I only held 2 events, 2 formal events, 1 informal event in 2018, and we had I'd have to look at the total revenue, but it was just shy. It was probably about $700,000 in gross revenue in 2017. And that was just with a couple of events and just launching this brand new brand. This year we expect to be in excess of probably $5 or $6 million in gross revenue. And we want to be at 10 million in 2020 is the goal. So we're on our way. We're on track to do that. To do at least 5 million this year. So we're pretty excited about that piece. And who knows, something could pop. We're still making some tweaks. We're thinking about doing bigger events at a lower ticket price and just trying to find our sweet spot in all of that. And I'm working with some of the best people in the educational business to really take that piece so that way I don't have to run it, and it's something that I don't have to relearn or anything. I just kind of come in. I have a percentage ownership in that, and it allows me to then really do more deals. That's the primary driver of doing the educational piece is more deal flow, more money flow. And so it's an exciting business to be in. I love teaching. I love meeting with people. I love trying to educate and help inspire people to see themselves as able to do more than maybe they could see themselves without me helping them, and really get outside the box and dream bigger. And it's pretty exciting for me. I love that aspect of the business. So yeah, we'll grow that piece too. And as that piece grows, I'm sure the investment company will mirror the same growth.
Yeah. Now, how does that work now? People attend a live event, they pay to attend it. And then what happens after that?
Yeah, so I teach people how to buy apartment buildings. It's A to Z on everything that they would need to do from cradle to grave on how to buy an apartment building, find off-market direct to seller deals, how to raise all the money for the down payment, how to secure the financing, and then once you close on it, how to improve the building in a way where you don't have a mass exodus of tenants. And it's a very scientific step-by-step process that you go through on how to bump up rents and renovate units and renovate the exteriors, and then get this thing stabilized over the course of 12 or 18 months, and then refinance it and what that looks like, what the terms look like on the back end, and then how to manage it on an ongoing basis. So somebody can come out to one of my events and they can learn everything they need to know in order to do this on their own. And the reality, though, that happens is they say, hey, listen, I think on my first deal, I'd rather just partner up with you, Tim, to make sure you hold my hand and make sure I don't screw anything up. And so it allows us to kind of partner up. It allows me to focus on what I'm good at. It allows them to focus on what they're good at. And then even after they understand the process, they say, hey, I like focusing on my piece. Let me focus on that. Let you focus on your piece. And the reason we're able to do that is because we're working in multi-million-dollar projects. It's hard to carve up the equity on a single family house that's a couple $100,000 and there's only $20,000 of profit built into it. But you can do it on a $10 million building when there's $2 million of equity built in, and there's more of a pie to go around. It's just a bigger piece of pie.
Right.
So people come out to my event. We educate them, give them all the tools that they would need. I introduce them to my entire power team, my attorneys, my CPAs, my commercial mortgage brokers, my insurance agents, all those different people. They're on discussion panels. So they're not only getting information from me, they're getting information from industry experts that have taken me 10 years to find the best in the business. And so and then I give them access to a whole bunch of stuff, like an online vault of information as well. So anyways, they get everything they would need in order to go do deals. And then when they leave, I connect them with my acquisitions guy, or with my chief investment officer. If they want to be a passive investor, I'll connect them with my chief investment officer. If they want to joint venture and partner up as an active operator, I'll connect them with my acquisitions director, and he'll help them review deals, help them negotiate contracts, help them put purchase agreements together, help them with all the due diligence. And we hold a hand the whole way through the process. So not only are you able to build some wealth with us, but you're also being educated and through real world experience. It's one thing about reading about how to do this stuff in a book or going to a seminar. It's a whole other thing about actually jumping in the water. That's when you learn how to swim.
Yeah, definitely. Now, I see on your website here that, at least for your past events, it was a 3-day live experience. Was that your offer, or do you have other things?
We have a couple different things right now. There's an online type training as well, a couple different price points, a couple different things that we have to offer. So there's an online type of version, more just how to find deals. And then the 3-day is like the intensive seminar, dive deep for 3 days on everything that how we do and what we do. We have a mastermind group too. That's by invite only. It's invitation only for some of the higher level folks and entrepreneurs that want some ongoing support. But that's not something that we really advertise. But yeah, I mean, we try to keep it simple. I don't have like all sorts of different, products and stuff that we offer. It's really just more of an online, a live, and then when you get to a point where you're ready for it, we have the mastermind.
Okay, fantastic. So I know you said before you're adjusting the pricing. Can you give the rough ranges for these 3 different categories?
Yeah. So I'd have to talk to my business partners on it, because they're the ones who adjust the pricing. But it depends on if you're bringing a business partner to the live event, or if you're coming solo, if you need hotel and like lodging and all that different kind of stuff. It usually ranges, $5,000 to $8,500, depending on where we are and what's going on, and how many business partners and stuff that you're bringing in and all that. So that's for the live event. The online is I think it's only a couple $1,000 to plug into that. It's online, plus we do some phone calls and stuff, some group calls and a Facebook group. And then our masterminds, I think it's $24,000 a year. So it seems like a big price point, but the reality is, you do one apartment building deal, and I mean, you take a look at the deal that I gave you an example on earlier. You buy one 48 unit apartment building, and if you own 80% of that, or let's just say you own 50% of that deal, and you can get $250,000 from tax-free loan proceeds inside 12 months, like that's a good deal. That's a pretty good return on investment. Plus you have cash flow of around, $3,500 a month for the rest of your life, as long as you own that building. And so I'm teaching people how to build wealth. And if you put it in that context of really understanding what the information is worth, and not having to go through the 10 years of being kicked in the teeth like I have, and having all the tools and everything there available for you, and at like in the palm of your hand, and rubbing elbows with. I mean, these are not newbies that come out to my events. It's usually people who are making couple $100,000 a year, $100,000 a year, up to millions of dollars a year in their traditional business, whether that's real estate or they're an entrepreneur in something else. And so it's a high caliber of individuals that come out to my events. So it's the networking alone is insane. Plus the education's pretty amazing. And then, and then the advisors council is our mastermind. That's like having a board of directors for your business for $2,000 a month. You put it in that context, and you think about the support and the advice and the people that can give you direction. And every time, as you reach different levels in business, there's different levels of hurdles and obstructions that you hit too, right? And so how do you break through those barriers that much faster? It's by meeting with a group of advisors on a regular basis, usually quarterly, and they can help you push through those barriers that much faster because they've been there, they've done that, hey, I went through that 3 years ago on my business. Here's what I did that I would definitely do again. Here's what I did that I wish I didn't do. And you're able to learn from other people's experiences. And so, it's pretty exciting. I like being in the education realm, but I also do a lot of deals with my students and people that are in the group. So it's fun from that capacity too.
Yeah. And I do like the model you have, because I really see how you build that out. If you do it in a way that doesn't take up too much of your time, that you can leverage, then you can get more leads, more investors, more partners. And I can really see that really growing your business rapidly. Yeah.
So I have a small percentage of ownership in the education business. I actually just get paid a speaking fee and like a royalty. And my main purpose of doing that business is because of wanting to do more deals with students. So it has become a great funnel of opportunity and both for deals and money. But again, my main focus is building true legacy wealth by buying apartment buildings. It's not about getting rich in the education business. That's not what I do.
Right. Exactly. 3 last questions for you. First one is, if you were to have a billboard advertising CLE Turnkey Real Estate on a fast-moving, busy freeway that moves quickly, what would your message be? And typically people only have 6 seconds to read a billboard before they drive by it. So what's your 6-second billboard message?
So if it was a pitch for my business, it would just say, invest in apartment buildings, call Cleveland Turnkey Real Estate.
Okay.
That it would be straight to the point, direct in that capacity. If it was a billboard just for inspiring other people, or like a life billboard on best life advice I could give, it'd be your best. It's in my email signature. It's in my Facebook profile. It's something that I live by, of be your best in everything that you do. You don't have to be the best in that, whatever you do, but you need to be your best. Like push the limits. If you're not using your talents to their capacity, then you're wasting talents. Right. And I think a lot of us are given gifts. I know everybody's given a gift. Sometimes they just have to find it. And if you're not using your gifts and you're not pushing your limits, and you're not being the best spouse you can be, and being the best parent you can be, and being the best friend you can be, and being the best boss you can be, and being the best entrepreneur, and being the best, physically that you can be, and not pushing your limits all the time. I think, we have the ability to be great, and I think we have the responsibility to be great. And so I would say be your best would be my other one.
All right, good one. And final two questions. Maybe you can recap again who your ideal investors are, or perhaps ideal partners, and what's the best way for them to reach you and your team?
No, I appreciate that. So if there's anybody who wants to, anybody who's an active real estate investor, more or less doing it on a full-time basis, and they're trying to get out of the transactional flipping of houses, and then you sell the house and you have to go do it again in order to get paid again and again and again. And they're trying to scale up into apartments and commercial real estate. That would be one category of people that I work with. And then the other category is typically successful entrepreneurs who are not involved in real estate, and they have a traditional business, a successful business. They have product launches, or they're selling their business, and they have some extra cash or cash flow, or a significant pool of cash that they're trying to then invest into something that's just safe, stable, insulated, and still kicks off a good return with some upside equity. And those are passive investors. And so if anybody fits either of those molds, either of those categories, you can connect with me either on social media, Tim Bratz, find me, send me a message, or you can go to my website. I'm sure Malcolm will share it, CLEturnkey.com, and just submit an inquiry on there, asking for some more information, and depending on what you want to do. And so that's probably the best way. My education, if anybody wants to plug into that, that's commercialempire.com. That's my educational brand, and my team will reach out to you with some details on that if once you fill out that application. But yeah, it's usually the best way. Social media, follow me on social media. If you're not on Facebook, please find me on Facebook. I try to put out a lot of free content, and a lot of insight on deals, and talking about stuff that I have going on, and not only helping people with real estate, but helping them with wealth building and helping them with life. So it's important stuff to me.
Tim, would you like to spell out your last name? Because the way you say it is spelled a little bit differently.
Yeah, it's Bratz, Bratz.
All right, fantastic. Thanks for joining us today, Tim, and sharing how you grew your company's sales so rapidly.
Malcolm, I appreciate it. Thank you for putting this stuff together. I know it's a lot of work on your end, and you're making a big difference and a big impact in the world. So appreciate you too, buddy.
All right, thanks for that. We've been speaking with Tim Bratz, the CEO and founder of CLE Turnkey Real Estate, about his company's rapid growth. For interviews with other fast-growing, high-value sales companies, or to learn how we can accelerate your firm's high-value sales through automation, visit eversprint.com.